Welcome to the Cover Your Assets podcast, a show for the physician who understands the importance of protecting everything you've worked so hard to achieve. If you're ready to find the peace of mind that only financial security can bring, let's get started. Here's your host, Billy Gwaltney.
Hello, welcome to this episode of the Cover Your Assets podcast. I'm your host, Billy Gwaltney, excited to be here with you today. In this episode, we're going to answer the question of what happens to my disability policy if my income increases or goes up in the future. And that's a very common question. I work with physicians, helping them secure their private specialty on occupation disability coverage. I'm an independent broker. There are 4 top-tier contracts that we broker. There are only 4. That's a key element to remember. And I broker all 4, and we have clients with all 4. We have clients on claim. It does exactly what it's supposed to do from a coverage standpoint. They all get paid. The amount that does get paid is determined based on how much you've purchased and how much you're paying for. That's the short answer to the question of what happens to my disability policy if my income increases. As it increases, we have to proactively increase your coverage. So I start working with clients typically when they're in training, and we'll start with, say, an amount of $5,000 a month of coverage. The policy would include, again, if designed properly and with medical, depending on the medical screening situation, it'll include what's called the future increase option or the benefit increase rider that's on the policy that allows the insured, you, the policyholder, to purchase or increase your coverage, purchase more coverage as an attending as your income increases. Now, once you become an attending or during training, they'll allow you to have up to $5,000 a month of coverage typically. And then once you become an attending, there's a formula that companies use to calculate how much insurance you can buy. And usually there's a cap of the maximum amount of insurance of either $20,000 or $30,000 per month of coverage. Sometimes it's $15,000. It just depends, but you'll want to make sure the details of that. But that doesn't mean that you can just purchase $20,000 because you're okay paying for that. There's a formula where the companies will look at your income and a percentage of any group long-term disability coverage in place with your employer. And those 2 things go into this formula to calculate how much of this private coverage you can purchase. It's a non-taxable benefit. And so the math sometimes can look a little odd at first in terms of the replacement amount. For clients that want to maximize their coverage, we can usually get them to about 75% of their net pay, depending on what state you live in. The higher the state income tax, if you're in a place where the taxes are high, for that state and city and that kind of thing, then it could be closer to 80 or 85% of your net pay. If you're in a lower tax bracket, it could be lower. And the higher your income it goes, the higher the benefit can be, but the lower the percentage of replacement. Insurance companies are very concerned about people having too much of an incentive to become disabled, believe it or not. And so no one can get rich on a claim. That's their focus is to make sure that if someone does not see tapping out and getting creative about how to become disabled as a good thing. So they want to make sure that people are not overinsured. So once you become an attending, for our clients that want to increase their coverage, which the vast majority of them want to, we run the numbers based on their income and calculate how much they can purchase, and then they're able to increase that coverage, usually without any medical screening and with the trainee discount included and with the same true specialty definitions included. There are times when someone would need to go back through medical screening to get more coverage. It just depends on the situation. But generally speaking, they're able to do that. But regardless of how that higher amount is purchased or secured, it needs to be proactively done. And by that mean, it doesn't just happen automatically. Insurance companies don't know what your income is unless you tell them. And if you're not paying for a higher benefit, then you don't have the higher benefit. So the rate is going to increase proportionally. Usually there's a linear relationship between the benefit and the cost. So if you're paying $100 a month for $5,000 a month, then it's going to be $300 a month for $15,000 a month of benefit, just as an example. So when you become an attending, you want to make sure that you run the numbers to calculate how much you can purchase and then actually follow through on that, so that from that point forward, that becomes the amount that they're going to pay if you become disabled. Okay, so I want to be perfectly clear here. If you had $5,000 a month of coverage and you become an attending and your income is now $400,000 per year, and you become disabled without increasing that before you've gotten around to increasing the coverage, then they're going to pay $5,000 per month based on what your policy benefit is. Okay. And then once a claim is filed, you're not eligible to then increase coverage based on what your income was or what your coverage amount should have been or could have been. Once a claim is filed, that's the amount they're going to pay. And that may have the cost of living adjustment rider on it that could increase it, by up to 4% or 3% per year. But other than that, the amount cannot be increased. And so once you become an attending, it's important to do that sooner than later so that the higher amount of coverage, you start paying for it, but that becomes now the amount that they're going to pay if you're disabled. Okay. So if your income goes up in the future, nothing is going to technically happen to your disability policy until you activate the increase option and the insurance company confirms that you're eligible now for a higher benefit and there's a higher cost associated with that. And then you start paying that higher cost. Once that higher cost is paid, then that becomes the higher benefit. Happy to discuss this further. If there's still some confusion or questions you have about your particular situation, would be again, happy to chat with you about it. Hopefully this is at least an initial start to get you along the way. Feel free to contact me. You can text me at 704-270-2376, and I'd be happy to schedule a time to chat with you. Again, 704-270-2376. It's great spending time with you. I look forward to next time. Thank you, as always, for carving out a few minutes.
Thanks for listening to the Cover Your Assets podcast, a Work P2P production. New episodes drop every 2 weeks. If you've enjoyed the conversation, subscribe, rate, and review this podcast. For more tips and advice, visit the website and YouTube channel. Check the show notes for links. Join us next time for another episode dedicated to helping physicians like you get your disability insurance right and protect your way of life.